In today's global economy, digitalization has become a key driver of economic growth, recovery, and competitiveness. Digital tools such as e-commerce, e-payment system, and cloud computing are no longer optional for small and medium-sized enterprises or SMEs, but essential for improving efficiency and reaching customers quickly. However, many SMEs still face challenges such as cybersecurity threats, online fraud, high logistic costs, and a lack of digital skills. Therefore, this study aims to compare the digital readiness and digital platform adoption of SMEs in Malaysia, Indonesia, and Singapore. The research also examines how these factors affect SME performance in the global market and identifies barriers to cross-border e-commerce. In addition, it evaluates the role of government support, including policies, grants, and digital initiatives in helping SMEs overcome these challenges. These three countries were selected because they represent different levels of digital maturity, providing a valuable comparison of SME digital transformation across Southeast Asia.
For this section, I will explain the literature review and conceptual framework of our study. This study focused on 4 key concepts. The first is digital economy, which refers to use of digital technology such as e-commerce, digital payments, and the internet to improve businesses' operations and reach more customers efficiently. The second concept is globalization, which allows businesses to expand beyond their domestic markets and participate in international trade through technology and digital communication. The third concept is cross-border e-commerce, where businesses sell product and service across different countries through online platform. This enables SMEs to access largest market and increase their revenue with lower operating costs. The fourth concept is digital readiness, which refers to the ability of country, organization, or individual to adopt and use digital technology effectively. Factors such as internet, infrastructure, digital skills, and government support are important, determining digital readiness. This study is supported by 3 theories: comparative advantage theory, H-share of lean theory, and new trade theory. This theory explains how technology, resources, innovation, and specialization can improve a country and businesses' competitiveness in international trade. Finally, the conceptual framework shows that digital transformation and digital readiness positively influence SME competitiveness in cross-border e-commerce among Malaysia, Indonesia, and Singapore. Therefore, greater adoption of digital technology can help SME improve efficiency, expand internationally, and achieve better businesses performance.
Next, I will explain the methodology of this study. This study used a qualitative comparative approach to analyze the economic development of Malaysia, Indonesia, and Singapore. The data were collected from reliable sources, namely the World Bank Open Data. The analysis focused on key economic indicators such as GDP, GDP per capita, economic growth, unemployment rate, and inflation rate. These 3 countries were selected because they represent different levels of economic development. Singapore is a highly developed country with an economy driven by finance and technology. Malaysia is a developing country supported by manufacturing, services, and trade, while Indonesia's economy is mainly supported by natural resources and its large domestic market. Based on 2024 data, Singapore recorded the highest GDP per capita, while Malaysia and Indonesia showed slightly higher economic growth rates. By comparing this indicator, the study identifies the similarities, differences, strengths, and challenges of each country's economy, providing a better understanding of economic development within the Asia region.
Next, I will explain comparative analysis and discussion. Based on the comparison of the 3 countries, Singapore demonstrates the highest level of SME digital readiness with a digital adoption rate of 82%, followed by Malaysia at 72.7%, while Indonesia records the lowest rate at 38%. These differences are not only influenced by economic development but are also driven by the quality of digital infrastructure, government support and workforce capabilities. Singapore benefits from advanced internet infrastructure and highly skilled workforce and strong government initiatives such as Smart Nation program. As a result, Singaporean SMEs are better positioned to participate in global e-commerce and international trade. Malaysia occupies a middle position. Although the government has introduced initiatives such as My Digital and MDEC to encourage digital transformation, the digital gap between urban and rural areas remains a challenge that limits equal access to digital opportunities for all SMEs. In contrast, Indonesia has the largest market size and SME population among the three countries. However, its digital adoption remains relatively low due to uneven infrastructure development across islands, a high proportion of informal business, and limited digital skills among entrepreneurs. Overall, this comparison highlights that SME digital competitiveness is determined not only by market size or economic strength, but also by a country's ability to build a comprehensive digital ecosystem through strong infrastructure, skilled human capital, and effective government policies.
Next, I will briefly present the policy application and strategy recommendations for SME digital transformation in ASEAN. At the country level, Singapore is encouraged to introduce the ASEAN SME Digital Passport, a blockchain-based credential that can simplify cross-border trade, reduce compliance burdens, and improve regional integrations. In Malaysia, the Digital Desa 2.0 program is proposed to address the urban-rural digital divide. This initiative provides free e-commerce platform, digital literacy training, and logistics subsidies to help rural SMEs become more competitive and expand into export markets. For Indonesia, the Gerai Digital Global Program aims to formalize more MSMEs by integrating e-KYC service, digital wallets, and e-commerce storefronts into one digital platform, making it easier for business to participate in trade. At the regional ASEAN level, key recommendations include harmonizing digital trade regulations, creating the ASEAN Cross-Border SME Digital Fund, and introducing an ASEAN SMEs AI Readiness Index to monitor digital progress across member countries. At the global level, the WTO and World Bank should provide greater support through SME-friendly digital trade policies and funding for digital infrastructure and AI adoption. Overall, these recommendations highlight the importance of collaborations between governments, business, and international organizations to create a more inclusive, competitive, and digitally connected ASEAN SME ecosystem.
Next, I will explain the implementation consideration. To ensure successful implementation, government, SMEs, Asian organizations, and international institutions must work together. The main priorities are improving digital infrastructure, especially in rural areas, providing financial assistance, and offering digital skills training. However, challenges such as limited internet access, cybersecurity risks, and different regulations across Asian countries may affect the process. To overcome these challenges, government should strengthen digital support programs and encourage SMEs to participate in e-commerce and regional digital trade activities.
Our comparative study demonstrates that while digital transformation drives cross-border trade and SMEs' global success depend on heavily national digital readiness. Meditating the new trade theory, Singapore leverages its capital-intensive infrastructure for a high-value comparative advantage, while Malaysia faces urban-rural divide and Indonesia battles high business informality. Ultimately, bridging this regional divide requires synchronized Asian coordination through initiatives like the Asian SME Digital Passport to foster a resilient, inclusive, and global competitive digital economy.